Smart money just entered this PolyMarket, and almost nobody is talking about it. And if you're trading prediction markets seriously, this is exactly the type of setup you need to understand because this isn't short-term noise. This is positioning in the 2028 Republican presidential nominee market, where over $290 million in volume has already flowed in. And right now, JD Vance is sitting around 46 to 47%, which might look high at first glance. But when you break down the structure behind that probability, it actually becomes very interesting. Because what most people see is just a number, while what professionals see is consolidation dynamics, donor alignment, elite signaling, and early polling behavior. And that's exactly what we analyzed using PolySight's AI Market Analyzer. So let's break this down properly. First, understand the structure of this market. Vance is currently the clear frontrunner, with Marco Rubio sitting around 14%, Trump around 5%, and DeSantis even lower, which means the field is fragmented. And fragmented fields create consolidation potential for whoever has institutional backing. And this is where the smart money thesis comes in. Because historically, when you have a sitting vice president or designated heir dynamic, party elites, major donors, and activist networks tend to coordinate around the incumbent administration's chosen successor, especially if the party is unified and not in civil war mode. And that creates structural advantage long before retail traders fully price it in. Second layer here is early polling behavior. Vance's polling in early cycles, ranging roughly in that 30 to 40% band, is consistent with a frontrunner who doesn't need majority support yet, but only needs to consolidate as weaker candidates split the remainder. And in fragmented primary systems, that's often enough to maintain frontrunner status for extended periods. Now here's where PolySight's analysis becomes powerful. Because instead of guessing whether 47% is expensive or cheap, we look at probability asymmetry and consolidation pathways. The AI flagged a 56% confidence lean toward Vance based on air dynamics, donor network strength, and consolidation modeling, meaning the implied market probability and modeled structural probability are not perfectly aligned. And that gap is where inefficiency lives. Now, does that mean this is guaranteed? Absolutely not. There are real risks. Rubio's sextate momentum could increase his credible alternative positioning. Trump could re-enter more aggressively than currently priced, and political markets are path-dependent. But here's the key difference between amateur traders and structured traders. Amateurs react to headlines, while structured traders model consolidation and power alignment. And right now, this market shows signs of elite alignment forming before retail conviction fully catches up. And that's why when you see size flow entering around these levels, you need to ask whether this is speculative momentum or informed positioning. And when we ran this through PolySight, it didn't just spit out a blind buy signal, it outlined the reasoning, the structural advantages, and the key risks, which allows you to trade with defined expectations instead of emotional bias. So if you're looking at this market and thinking 47% feels high, the real question is not whether it feels high, it's whether the field structure justifies expansion beyond 50 over time. Because if consolidation accelerates, that 47 can become 55 before most people adjust. And if fragmentation persists, the downside is capped relative to long-term timeline. So this becomes a probability and patience trade rather than a momentum chase. And this is exactly how you should be approaching political prediction markets. Filter high-volume markets, identify front-runner consolidation patterns, run structured AI analysis to compare implied probability versus modeled structural probability, define your risk scenarios, and then position accordingly. Because the edge in prediction markets is not speed, it's structure. And if you're serious about trading these markets professionally, instead of guessing based on vibes, you need a repeatable framework. And that's exactly what tools like PolySight are built for. Not to tell you what to think, but to surface inefficiencies before the crowd fully prices them in.